So welcome to Professor Markos Zachariadis, who is Professor and Greensill Chair in Financial Technology and Information Systems at the University of Manchester. And without further ado, let me give the floor to Markos.
Thanks, Julia. Sorry, I'm a couple minutes late there because my Zoom decided to update to a new version, but all good. Thanks for having me and for the invitation. What I'm going to try and do today for the next 30 minutes or so is to provide a brief introduction, I guess, into new regulations within the banking space and financial services overall, as the regime is kind of, I guess, expanding around the use of open APIs, or in a more broader sense around more data openness within banking financial services sector. And what I'm going to do is basically talk a little bit about the historical use of data within financial services and their openness in terms of communicating data within organizations, but also across organizations, how these have been implemented and used in the past. So some examples for payments, for example, which I'm sure you will know, but also then look into some of the new regulations that introduce data openness within the banking space, specifically looking at PSD2, which is the payment system number 2 within the European Union, but also the UK open banking regulation that both came into effect in January 2018. And these we expect to have big differences as far as the organizing of economic activity happens at the firm level, but also at the industry level, how the entire architecture of the banking sector sits. We expect that to evolve into something different. So I'm going to explain how that transition happens through the regulation and because of more data openness in the sector. Just to give a very brief background, so where I'm coming from, essentially, I'm not a legal scholar. My background is economics. I did my PhD at the LSE, so I studied the economic effects or productivity effects, let's say, of technology in financial services. And have been working for business schools since then. So I'm also interested in the strategies on how data or technologies can be implemented and the impact that they have at the organizational, but also industry level within financial services. So, and that's going to be the take that I'm going to try and take in this particular lecture. But also introduce, of course, the regulations and see kind of the relevance with this transition. Now, in terms of data sharing, as I said before, data sharing in financial services, and what I mean by data sharing, of course, I don't necessarily mean you sharing your data with your own bank, but what I mean is data sharing within the context or between organizations, right? So for example, when you make a payment online through a particular commerce website, you're using a Visa, for example, tool or some kind of payment gateway that links you to the Visa network. This kind of integration uses technologies like APIs, which I'm going to explain in a little while, or other technologies that integrate the two systems together and have them speaking to one another. So this is, in that context, data is being shared from you who you want to buy something, purchase something, and initiate the payment to another system that communicates on the data to different financial institutions and so on and so forth. And this kind of connectivity or integration between systems in order to share data within the context of payments or other things, if you want, happens across many different organizations. Like, for example, when you're paying by PayPal online, or when you're using Amazon payments, these are integrations between systems that exchange data between them. Now, these kind of integrations, most of the time, are bespoke and they're subject to some kind of agreement between these organizations. So it's not like any company can tap onto a PayPal or Amazon payments account without Amazon payments or PayPal knowing about it, right? So there needs to be some kind of agreement. You need to be on the roll or in the partnership program, for example, PayPal or Amazon or Visa to use Visa checkout, or MasterCard to use MasterPass API or MasterPass system, for example. So this kind of integration to data sharing has been happening, but it's not by any means any systematic one that it's very similar across all different systems, and also it's ad hoc. So organizations need to come together and agree. Now, there was at some point, these third parties though that didn't necessarily had access to these kind of systems, but still wanted to get access to the data that are being held by some of these systems, either at the bank level or perhaps at a company level, and so on and so forth. So imagine, for example, if you as a consumer, you have a bank account and you have all your information and your transactions history and so on and so forth within the context or this within the systems and operations of your bank, but you want to share this data now to somebody else, a third party that wants to get access to these data in order to be able to offer a service or a product, right? A new mortgage, for example. So how do you take this data that are in this closed system within the premises of the bank and share it onto a third party? And that's where we've seen technologies like screen scraping, we call them terminal emulation as well, which these are technologies which are meant to essentially log into the website pretending to be you, right? So this is kind of like a piece of code, let's say a software that logs into the website, pretends that it's you, and lifts all the data from your banking environment and extracts them in a very systematic and organized way into a spreadsheet, which then the spreadsheet can be used and shared on to third parties in order to be used more creatively. For example, maybe there's a FinTech app that tells you how much you're paying for coffee per month versus how much you're paying for other things, for furniture, or does this categorization of data that perhaps your bank doesn't do. In order to get access to these data, you need somehow to lift these data and take them out of the closed system. So these screen scraping processes in banking, they became very, very popular. However, this means that the implication there is that you as a consumer, you have to share your login credentials with this third-party system. And now, as you can understand, this can be very risky because these third-party systems are often not regulated, right? And they can be poor in terms of security, prone to attacks, and so on and so forth. And that's where a debate came into the industry that started saying, well, the idea of sharing data or extracting data from systems is really alluring. So it's kind of an important idea that needs to be explored further. But perhaps we may want to think about other technologies like application programming interfaces, which I'm going to explain, as I said before, in a minute. Or perhaps also think of new systematic ways of trying and extract data in a more kind of safer environment and guaranteeing people's privacy and so on and so forth. And to fill that gap, I guess there were firms like Yodlee, which merged back in the beginning of 2000, let's say, and Plaid more recently. Yodlee was acquired by InvestNet in 2015, and Plaid almost was acquired by Visa last year. So these companies became quite prominent in trying to extract data from closed systems and not selling them necessarily, but providing access to these data, subject to your consent, obviously, to customers' consent to third parties. So we've seen companies kind of emerging that were the gatekeepers of these data and access to these closed systems, which I think is a very good model and one that has served these kind of idea of open banking, as we call it, up until now. Now, on this side, if you think about data openness within financial services industry, the lack of access to data, according to economists at least, or people who look at competition within financial services, is one that distorts competition. And you can think of that in terms of, for example, if there is less transparency according to, let's say, the prices of the different current accounts that different banks hold, then there's going to be less good prices for the consumer. So consumers are going to be consuming more expensive products in financial services. Or if there is no sharing of data information around the quality of the products and services you're consuming as a consumer, then there is going to be less of innovating, for example, or less of switching and less competition within the bank industry. Or if there's less access or less ability to take your data and take it somewhere else, the switching of the data, or let's say the mobilization of the data, as we say sometimes. This means that switching costs, if you want to switch to a new service, that's going to be increasingly kind of more costly, and it's going to be less of it. And also lack of data. You think about the principle of data being closed into a particular system from a bank, for example. Lack of access to these data also means that such third parties that want to compete fairly in the industry, in the banking industry, will have less of a chance to put out their value propositions, because they won't have the information that are needed in order to pitch products to consumers. So if you take all these cases, and these are cases that are outlined in one of the first papers around open banking that were ever authored in the UK, and this was a co-authored paper, for example, from the Open Data Institute, a very big institute in the UK, looking at openness of data in different sectors, but also Fingleton Associates, who helped a lot the UK government also with the transition into open banking. So they identified these kind of bottlenecks or perhaps distortions of competition within the banking market because of lack of access to data. And this is, that's where it plays in terms, when it comes to regulation, because from one hand, of course, you want to have more competition. And as we saw these kind of four theses, let's say we know that more data opens will bring more competition, because you'll have cheaper products, better quality products, more switching between different products and services, but also lower barriers to entry for third parties who want to enter the sector. So you want to have that so that you can have more fair outcomes for consumers. But on the other side, you want to have, as a regulator, you want to have stability and integrity. And more data openness will potentially introduce more risks into the financial services sector, right? For many different reasons, either security risks or operational risks, or even systemic risks, because then you'll have more entities kind of operating at the different kind of layers within the banking architecture, let's say. And so this is, in the literature, I guess, around regulation and competition, this is a conflict that we very much see sometimes. And particularly in the banking industry, we have seen that there's less of innovation, less of investment for research and development, let's say, than there should be. So there was a study, for example, using OECD data done by the Stockholm School of Economics back in 2017, which said that if the global or the financial services proportion of the global GDP is about 6%, they noticed that R&D expenditure for innovation, innovative products was less than 1.5%, which should be in sync one way or another. So we know that there is a lack of innovation in that sense, and what can be done. And so regulators turned their attention into data openness. And for many jurisdictions across the world now, this is being seen as a standard kind of new initiative of bringing more competition and more innovation, and utilizing all this kind of fintech dynamic we can see across the world within the banking and financial services sector. And that's how the discussion also started across the European Union. That's how it started in the UK. So UK Open Banking, after this seminal paper in December 2014 by ODI and Fingleton Associates, the Competition and Markets Authority commissioned another study, and then 2016, they ordered the 9 biggest banks in the UK to open up their data to third parties. So this was mandated by law. It was the order by the CMA for the UK. And to implement that, they had a unique approach where they designed an implementation entity, as they call it, in order to be able to find ways to systematically share these data, systematically create interfaces that will share data on, not use screen scraping, because that was very risky. That was something that was less secure, and a lot of people in the industry advocated against it, but utilize technologies like APIs, which are standardized and more systematic in the way also being used within software development to connect systems. And that's what happened in the UK. Now, in parallel, in the European Union, there was exactly the same initiative, more or less, even though there was less of a standard for it. But it was called PSD2 and Payment Systems Directive 2 and UK Open Banking. They also came into effect exactly at the same time. That was both in January 2018, and they were very linked, very much linked together, because as you know, the UK was part of the European Union anyway. So any kind of directive put forward by the EU had to be transposed into national law in the UK. And essentially the open banking in the UK, for the most part, was seen as a European Union directive implementation, right? Even though it goes above and beyond PSD2, it's way more innovative in many different ways, but still is one of the many implementations of PSD2 you can see across many different jurisdictions in the European Union. Now, what does PSD2 say? And here's a couple of very important pillars. So the first is that banks will need to share account information, right? So they need to have some kind of account information service where if you as a customer, you consent to share your data, the bank will be mandated, they will have to share the data. So if I say to my bank, I want to share my data with this organization, third party, if this organization is regulated and the bank will need to do all these checks, they will have to share the data. There's no way to respond negatively to this request. So that's one pillar. But the second and most important pillar is the payment initiation service. So this means that if I order a third party to tap into my bank account and lift money and take them somewhere else, kind of like in the form of initiating a payment, they actually have to do that as well. So this is even more radical because as I will, towards the end of my presentation, I'll demonstrate that open banking is a huge trend that is catching up across the entire world right now, and for many people it's considered as the future of banking and even the future of finance as we're moving from open banking to open finance. The payment initiation bit is quite radical. So the European Union was one of the first, let's say, jurisdictions to implement this. So we've seen open banking in many different parts of the world, but very few have payment initiation. Because that means that I'll tell you in a bit about the business models and implications for this. But essentially, if payments and account information, they are both accessible from outside of the bank somehow, that could bypass the entire functionality of what, of the bank, right? So many people talked about disruption of the banking system or financial intermediation as we know it. And I think to a certain extent, that's a fair comment. So in the UK, OBI is the particular implementation entity to run this open banking framework. Nowadays it's called Open Banking Limited because it's an independent company that is being funded by the 9 largest banks in the UK. And their role basically is to design the standards, the interfaces that will connect the different systems. They will design the security and messaging layers of the data standards for the data to be communicated, and also authenticate third parties, in a sense, kind of keep this registry, or they call it whitelist, of third parties who are regulated. So banks who get requests from third parties on behalf of their customers to access data, they're reassured that these are legitimate kind of institutions. And there's more detail to it, both in PSD2 and also in the UK Open Banking. The industry for many years talked about the security implications, and the European Banking Authority came up with what we call today the regulatory technical standards, defining in much more detail the way through which the authentication would happen. And they came up with a framework which they called secure customer authentication, which required essentially people to provide, in order to give access to data and authenticate themselves, to provide something that they know, something that they possess, or something that it's inherent, for example, biometric characteristic of theirs, right? So a lot of these kind of modern era smartphones, they give you the ability to do all three essentially when you log into apps and so on and so forth. Now, back to APIs. So APIs, as I said before, I explained a little bit, they are, you know, essentially it's not rocket science. It's just a piece of code, a very short piece of code that tells you how to query data in a system. And it's fairly standardized. So there's particular standardized formats. But in all, you can think about an API as an electrical socket. This is how some of the prominent people in the literature would like to describe it. So if you want, for example, to consume electricity and you have a particular application or like a gadget that demands electricity, you just plug it onto the wall, and you know that you know that electricity will come out and essentially power this particular device. So APIs, in a way, they offer these, the unique characteristic is that they're standardized. So there's something like plugs, where whatever third-party software application you have, if a lot of the people use APIs to share data, these third-party applications can almost plug and play into a system in a standardized way. And that solves a huge amount of problems, because the regulators early on, especially in the UK, where they implemented these technologies systematically and through regulation, they said that if we have like, I don't know, 500, 600, 700, or 1,000 fintechs trying to tap onto this new open data economy and tap onto the systems of the banks, if each bank uses their own random kind of technology to share data, it's going to be very difficult for these APIs to integrate. And effectively, it's going to be like telling them, oh, here's the regulation around open banking, but it's kind of useless. Imagine if you're a fintech, you want to connect with other fintechs or other companies. If there's no standardized way to do that, you might end up developing dozens or hundreds of bespoke connections with each different institution. And that was a difficulty that I guess the UK kind of paradigm or the UK framework solved, because they demanded organizations to use APIs, especially the largest banks. And actually these APIs were so successful that a lot of other European countries are also using the UK systems. Now, I'm not going to spend a huge amount of time on the different kind of types of APIs, and I'm more than happy to share these slides. And I have a couple of papers that I think I've shared with Julia already around some of the work I've done. Yeah, exactly. So even in policy, etc. But essentially, APIs can be more on the closed side or more on the open side. And there's literature around open APIs. For example, super open data API could be something that is fully public. You just do a very basic registration online, and then you can access the data right away. But I think a more interesting way to categorize APIs or think about a different dimension of openness in terms of APIs is things like API accessibility, who can access them, and that was the previous slide, but also API functionality, what kind of categories of financial data you can consume, what kind of products will emerge from these different categories of data, and then things around usage, for example, how many data you can download and how quickly you can download this. And in the end, of course, you have the actual standards of these APIs. Again, within the API genre, let's say there's different kinds of APIs, even though I have to say there's a couple standards that dominate most of the financial services sector, like JSON APIs, and these are mostly web APIs that are being used even between systems. Now, APIs themselves, these small kind of interfaces or piece of code that allows organizations to connect to one another. They're, of course, technologies that facilitate connectivity, but you can think of them in terms of products, right? So if you go to the Twitter website, if you want to download a lot of Twitters, and a lot of tweets, sorry, you're a marketing company, you want to do a campaign, and you want to understand the sentiment of what people talk about on Twitter, right? And then you have to go and pay Twitter to use their API and essentially download as many messages as you want. Otherwise, there is a very kind of freemium type of model connectivity that you can have and download, I think, up to 30,000 tweets or something like that. So these APIs could be seen also as products, and Twitter and Facebook and other organizations that hold vast amounts of data and want to systematically monetize them and share them out there with potential buyers, clients, they treat them as products as well. They price them, they maintain them, they have new versions of them, they market them. Here's a new API, that's what it does. And the same with Apple. If you think about the iOS ecosystem and how they're trying to sell accessibility and development tools to developers who want to develop apps for the iOS ecosystem, that's in a very similar way they use that. And so, there are also boundary resources in the sense that they can be provided to developers who can innovate. So there's a lot of innovation happening as external value comes into a system. So again, think about the example of the iOS. I mean, how many of these applications would Apple have developed if they didn't have opened their APIs, haven't opened the phones to external developers, right? So these are kind of platform business models. This is very key in the economics literature, actually, talking about transaction costs and network externalities. So if you read perhaps one of my papers, you'll realize how important they are. But these are seen as boundary resources that can pull more innovation, external value into the system as well. But the last thing, which is also very interesting, they're seen as mini contracts, because if you're a Visa and you want to integrate in a commercial website, you have to do a bespoke agreement, you have to sit down, do all the contracting and sign the contracts of your collaboration and partnership. But if you randomly access an API, you don't have to do any of that, because in the terms and conditions, that's like a contract you buy to all the rules once you use the API, right? So this has, I guess, massive legal implications going forward, and in a very systematic and quick way. You can just have people agreeing to certain terms and conditions that potentially even have legal implications in the future, but you're safe from your side, as a system owner or platform owner who shares data using APIs in that way. And that's where we come to with the open banking story, because APIs, allow this connectivity of third parties, and gives them the opportunity to not just in a traditional kind of vertically integrated, let's say, business model, you have a bank pretty much doing everything, right? So the bank has all the internal systems, the core banking system, the AML, from money laundering, for fraud detection, and so on and so forth, payment gateways and everything. And then you, as a customer, you essentially end up consuming this value here, right, at the customer level. Oops, sorry, I'm not really good at this. But when you're opening up essentially your system to third parties, you're using APIs to basically connect third parties that would take all these data and provide new value to consumers, right? And this is yeah, and this is something we have been seeing. So this is just another diagram that you can see. If you have a core banking system, if you have the API layer, essentially, all this value which is external to you from different fintech applications or third-party applications, this can be incorporated as part of your platform. And that's the big use case, I guess, in terms of business models, new business models that we see emerging in the financial services sector. That's a big use case of open APIs in banking. And that allows banks to think, but also other financial institutions to think and go beyond the unbundling of the bank, as we have seen it kind of playing out with the fintech competition. A lot of fintechs are attacking the banks and all the different services, and create more collaborations under new business models like platform business models, which will essentially mean the rebundling of some of these services. And you can end up in the future having, a bank that, in the similar scenario where you have the iPhone and you're consuming a lot of different apps on your iPhone, fully nicely integrated into the same environment, you can actually have a bank that you tap onto external value using different fintechs as part of this rebundling of the services, leveraging platform business models. This is so this is talking about API aggregators. I'm going to skip that for now, but essentially the point here is that there's even more business models. If you think about the banking architecture, APIs provide even the ability to think of platform creation at different levels of the banking architecture. So what is the use and the good news for customers when it comes to open banking? Because I think that's, the key premise, which was part of a lot of regulations. And across the world, if you compare regulations to open banking, a lot of them are around the idea of competition. So that's how they started, to increase competition. But essentially, at the end of the day, competition serves the customer, right? So it's a customer-centric means, I guess. And in other models, like the Australian model, for example, they don't call it open banking, they call it data rights of consumers. Or in Canada, for example, they also call it again, consumer rights or something like that. I don't think they have a particular name yet, but they're trying to figure out different ways, because open banking, sounds a bit I guess risky to a lot of the consumers. What does open banking mean? Does that mean that everybody will have access to my data? No, it's a consensus based model, essentially. So you need to consent to share your data. But one way or another, open banking means more opportunities for more personalized products. So because now third parties will be able to access your data whenever you want and provide better bespoke products for you. It means better and more effective financial management or cash management. If you think about an SME, for example, that wants to take this data out from the bank and analyze it in a way that will have better insights of their organization, their treasury functionalities, for example. Again, with open banking and extracting these data, that will give the ability to other systems or software to take advantage of that. It potentially also means less bureaucracy, both at the bank and external kind of providers level, because now more data openness will allow for more competitive products that could be also faster and more cost effective for you. That also means more automation, because if you think about, I don't know about you guys, but for example, in the UK, if you want to apply for an insurance for your car, you go onto these compare websites, and then essentially you have to put all your data in somehow, and then you could spend hours, to input different fields about, your family situation, where you live, what is your budget, your your financial, let's say if you also apply for mortgage, your pay slips and your statements and so on and so forth. But if you have a way to share all this data through your bank automatically, that's definitely going to make a huge difference. But there's other use cases. So think about financial data aggregation. So here on the right, you have this phone where you can just put, you log into one particular app, and you can see all your different bank accounts aggregated in this particular app. And this app also can take all this data and analyze them in a way that will give you a fuller picture of your financials, right? So, and these are just, 2, 3, 4, I guess, benefits or use cases. There's a huge amount of utility that can be gained by data openness in the banking sector. And specifically, the open bank implementation entity in the UK has been working very closely with the industry to identify a lot of these use cases. And also, we're trying to do something similar at the university, a new initiative that will collect all these use cases and call it Open Banking Observatory, essentially, and trying to understand how, what is the utility after all from open banking, but a lot of use cases. So now this obviously at the bank level and at the customer level, but there's certain implications of banking at the industry level, and that's going to be almost one of my final points, essentially, that we're gradually seeing that the entire architecture of the sector in banking becomes more modular. So if you think of the traditional kind of pipeline business models on the left, right, where you had a bank pretty much do everything, and they're very siloed and product oriented. So they have, you know, for the mortgage products and offerings, they have databases that they hold all the key customer data about your payments and the pricing and so on and so forth. Then they'll do the risk analysis function within the bank and the ML compliance, you know, payments processing, all the interfaces and connectors, and then you have the distribution channels through the branches and the apps and so on and so forth. This is a very much integrated model, but by opening data from the bank and allowing third parties to essentially integrate value and processes and software that does different parts of this entire value chain that we described just now, different bits and pieces, and they're fully integrated into a coherent system. That means that you end up with a more modular, a more disintegrated industry architecture. And this is one of the major findings. We're trying to write it up now in a paper, because you know, obviously that has major implications in the way we understand new kinds of risks in the financial services sector and so on and so forth. But it means that potentially when you're consuming a product through a FinTech A, for example, you know, it's not anymore a product that is being from beginning to end designed and produced and provided by FinTech A, but you know, the core banking infrastructure where this product lies could be held by incumbent bank A, then the compliance could be held by bank B or bank A again, perhaps. The payments processing could be happening through challenger bank A, and so on and so forth. So when you get selling a product, because of open banking, we end up having a more disintegrated architecture, which means that for each service you consume, the value chain can be drastically different than before. So these are the few observations. Now, the last two slides I had were basically pointing to the paper I shared that I authored just this past August in 2020. That was on the back of the inquiry that happened in the Canadian market for open banking. And the industry came together and discussed all the issues and how they wanted to approach open banking, because each country will regulate or not, perhaps, open banking in different ways. So there was a consultation, which I also kind of informally took part and made a lot of presentations at the Department of Finance, but also different banks and fintechs around Canada. And I came up after interviewing a lot of people from regulators, fintechs, technology companies, banks, and policymakers of different kinds. I came up with a list essentially of what are the things that regulators will need to look into when they're trying to regulate open banking in a particular jurisdiction. So I came up with 3 themes, and each theme had different points within it. But for example, the first one would be around objectives and the different approach. Then accountability, talking about liability and data privacy laws was another one. And then implementation, which was probably the biggest one, and a lot of lessons from the UK and Europe as well, has different kind of parts within it, and different kind of decisions policymakers will need to make in order to regulate open banking in their own country. And that's indeed the case. So as I said before, as I was starting this presentation, there is quite a bit of variation across different countries around the world when they think about implementing or regulating open banking in their own context, right? So Australia, as I said before, they have the Data Rights Act. In Canada, they call it Consumer driven banking or something like that. Nowadays, they keep changing names. But again, if you look at Japan, if you look at India, if you look at Brazil, they have very different approach. And now in the US, they're also starting thinking about discussing open banking regulation. So this is a new movement that comes from the Dodd-Frank regulation, talking about data openness, and this was kind of ineffective all this time. But the regulator, essentially, I think 3 or 4 months ago, just before 2020 ends, they made an announcement saying that we're unhappy with the way banks are sharing data. And so we're going to start investigating how we could potentially regulate this across the US. And I think I can finish here in that sense. Yeah, that's pretty much more or less what I'd like to share with you. If you guys have any questions, be more than happy to chat.
Thank you very much, Markos. And now we're moving to Q&A, and I'll stop the recording.